Okay, welcome to this special city council meeting on December 30th at 5:05. Because there is no quorum, this meeting is adjourned.
But the meeting is not actually adjourned, because what we're going to do now is I hope that the council members can stay and listen to a bit of a presentation and hopefully have a conversation. There's still opportunity for the council members that are here to ask questions. I know that there is since this is not a council meeting at this point because there isn't a quorum, we have to be careful about receiving information and not deliberating on that information in this setting. But I would like to take the opportunity for the mostly staff that is in the room, but a couple of non-staff residents who are also here, and anybody watching either live or later. I think getting a little bit of a preview of this particular piece of legislation might be useful to start this conversation again.
Mayor, I'd like to ask the law director, I want to make sure we're not violating anything.
By all means.
Mr. Law Director?
Thank you, Mr. President. So I agree with the mayor in large part. I would say that the council meeting that was on the calendar has been adjourned. There is no council meeting. Therefore, as the mayor indicated, council should not deliberate, obviously cannot vote or take any formal action. Council can, the members of council who are present can remain present and listen. I think theoretically questions could be asked. That can become somewhat dangerous and be a slippery slope if questions start to turn into, an argument about a certain thing. So in general, I would probably advise to observe and listen more than anything else.
Thank you.
Just a follow question. So pretty much stick to any questions that may just be for clarification purposes if we would.
Yes, yeah.
Thank you. And by the way, I'm open to this. I'm looking forward to the presentations.
All right. Now, I have a very, very brief PowerPoint, and then we will proceed hopefully to a little bit more of a conversational tone on this. So 2025, Cleveland Heights appropriations. For those of you who are not aware, very recently I submitted to City Council a new ordinance that would provide appropriations for fiscal year 2025. I'm hoping that Council will take this opportunity to begin the process of working with me and the administration to sort out a full year budget. That's the track that we, by necessity, need to be on anyway. And so I thought, why not start now? And so I did a bunch of work taking a look line by line at the budget that was originally submitted in November. And, based on some of the concerns that I heard from council members, I did a bit of value engineering and took a look at where we could shave some expense here or there in order to address some of the concerns that some council members expressed about using our reserve in order to fund the activities of the city in 2025. I don't know if anybody here has had a chance to take a very close look at the new ordinance that was provided to council. Let's see, is ordinance number 273, 2024. Since today is not a council meeting, it is not being given first reading today, but I wanted to take the opportunity to provide the public and the council members that are here an opportunity to take a look. So it is pretty much the same in essence as the original 2025 appropriations ordinance. You can see that there's a bit more of a whereas, just illuminating and highlighting the process that it took to get here. I'm not going to read it all the way through, but for the most part, what this legislation does, should council take a look at these appropriations requests and determine that it is in the best interest of the city to fund the city departments according to their appropriations requests for the operation of the departments and the government, then this would simultaneously repeal and then replace the temporary budget that council passed on the 19th of December. This would be a simultaneous process, no need to repeal first and then replace. Once council is comfortable with the appropriations requests that have been put in this ordinance, at that point, council presumably would feel comfortable moving forward with a full year budget. So I will move over to the exhibit. Exhibit 1 is the actual meat of an appropriations ordinance. This is what an appropriations ordinance looks like in the city of Cleveland Heights and many other places. It is a list of funds and departments within those funds, and a request for council to fund a variety of particular objects, as we call them. So personal services, for instance, in the city council department within the general fund. Personal services includes salaries. It includes medical benefits, those sorts of things that relate to the employees or the personnel that get the job done. Other than personal services is sort of a catch-all in a certain respect and includes a bunch of different other things. In this case, you can see council's total budget is $298,572. And you can see going down this ordinance, much of this is the same as the previous ordinance that was introduced. But I wanted to highlight something, no pun intended, because I have provided a bit of a signal where in a particular department for a particular object, where a sort of a value engineering has taken place. So for instance, in general operations, I have highlighted that, and if you compare it to the previous budget, you'll see that those figures have come down a bit. You'll see this in general operations in the general fund. You'll see it in community relations, other than personal services, in finance, the Department of Finance. You'll see it here in human resources, in the law department, in planning, both personal services and other than personal services. See it in our SBA grants department. And when we say department, by the way, just as a heads up, department is a term that we use in this budgetary language. It doesn't mean that it is a department full of people. It means that for budgetary purposes, this is a department for funding purposes. And I welcome anybody who has taken a look at this ordinance to ask some questions and have any comments. And I will get into a bit of the detail about what we've done here to make these reductions. So I'll get back to this PowerPoint. So municipal budgeting in Cleveland Heights. So anything that we do in the city, any road we pave, any person we pay, any contract we sign, that requires funding. And funding in a municipal government requires city council to pass an appropriation ordinance, which is not exactly a budget, but it's a piece of a budget. So an appropriation ordinance is providing the budgetary authority for the administration to fund the various activities of the government. According to state law, the administration cannot legally expend public funds except as allowed by an approved appropriation by the budgetary authority. So for some background, in mid-November, the mayor in Cleveland Heights is required to provide the council with an estimate of expected revenues and expenditures and a recommendation for appropriations for the city for the ensuing year. And this is in Article 9, Section 1 of our charter. Following that, upon receiving the mayor's estimate and recommendations for appropriation, City Council is required to at once prepare an appropriation ordinance based on the mayor's estimates. And this is found in Article 9, Section 2 of our charter. So from August through the beginning of November, department and division heads worked on sorting out their personnel requirements and requests, personnel needs, and other needs for the department, working with the city administrator, the mayor, and the finance director to develop both the revenue estimates that their departments will be bringing in. Take, for instance, funds for services or charges for services at the community center. That is a bit of revenue that our Parks and Recreation Department brings in. And so those sorts of revenue estimates are worked through with the finance director to determine how much we anticipate bringing in terms of revenue. And also to craft those requests for staffing. Sometimes departments want new staff. For instance, in our fire division, based on some really long-standing just jumps in run volume for our fire crews, and the recent contract signing that reduced the work week for our firefighters from 50 hours to 48 hours per week. Sometimes you have to add more staff, and that was one of the requests that we made both during this year and also for next year. So operating and capital expenses for the upcoming fiscal year are worked through during that period in the administrative branch. So based on the work and research of the administration, then in mid-November, the administration provides those estimates and recommended appropriations ordinance to the council. The council held several hearings on that appropriations ordinance and ultimately decided to reject that recommended budget for fiscal year 2025 and instead decided to craft a temporary budget that would fund an appropriation for the first 3 months of 2025. So, since I believe that it provides a greater degree of stability and reduces obstacles in the government's operations, it is optimal to have a full fiscal year of appropriations for the government to operate. I don't know that this is a controversial statement. I think it's optimal for that to take place. And in service to that, I have taken some time to work through the budget that was originally passed and revise it and resubmit an appropriations ordinance for the funding of the government operations for the full fiscal year 2025. And I hope that this appropriations ordinance can be the basis of our work together, the council and the mayor, to produce what ultimately will fund the government for the full fiscal year 2025. In this process, I fully anticipate questions. I fully anticipate any individual council member making a motion to amend if they see fit, if they feel that a particular expenditure is too high, or if they feel that there are funding opportunities for additional services or goods that the government might want to consider. I welcome that conversation. I know that we didn't have sort of a full conversation about amendments in the last budget appropriation ordinance, but I think that this is an opportunity for us to take some time, work through it, and have that conversation. So, very, very quick and dirty overview. The total budgeted revenues I have not adjusted from the last appropriations ordinance that I submitted to the council. And I will explain why. And I hope to address some of the concerns that some of the council members mentioned related to the revenues and our forecast of these revenues. moving forward. So the total budgeted revenues are 97.4 million approximately. This revenue figure, this estimated revenue figure for fiscal year 2025 is about a 3% increase over the budgeted revenues that we budgeted for in fiscal year 2024. The difference in that 3% is primarily due to some expected increases in our income tax, which is a bit minimal. It's not the hugest portion of this difference. Property taxes, we're expecting an increase in as well, and we're expecting an increase in our investment income from the figure that we budgeted for in 2024. So, as you'll see, and if you'll remember, the previous appropriations ordinance had budgeted expenses, I believe, in the realm of maybe around 98 or so million. So it was slightly north of our anticipated budgeted revenues for 2025. And you'll see that in this case, the work that I did to cut some of those costs in this new revised budget takes those budgeted expenses down to 95.9 million, a little less than 95.9 million, which would first represent a 36% decrease from our fiscal year 2024 budgeted expenses. And a lot of that difference, a lot of that reduction is due to the fact that we are no longer going to be allocating ARPA dollars. So those millions and millions of dollars are pulled out of our expected expenses for 2025. And we are also looking at a reduction in our cash-based capital spending strategy. The last year's capital spending was a bit of an anomaly because we had a great deal of reserve that we were looking to spend down a bit in order to meet some of the needs of the organization. So we purchased a lot of things, we tried to fix a lot of things, and we spent a lot more in capital than you would normally expect with a city like Cleveland Heights. And we can take a look in a longer conversation about our sort of historical figures for our capital spending. I think normally over the past, several, maybe up to 5 years or so, our normal spending is somewhere to the tune of less than $10 million, maybe around 9 or 8 per year in terms of capital. So we've reduced the capital spending from cash in this budget as well. And you'll also note that fiscal year 2025, according to this budget, ends with a surplus of 1.6 million. So this is a bit difficult to read if you're looking at it on the big screen here, but this is what you'll see in the budget book that you got in 2024 and for 2024 and for 2025. And this is sort of our revenue classification and a comparison between our 2024 budgeted revenues and our 2025 budgeted revenues. You can see the amounts that we're expecting to receive in 2025 and the comparison both in terms of the dollar figures and in terms of a percentage difference. And I'm going to come back to this slide in a little bit because we're going to go through some of these revenue sources in a bit as well. Next up is our 2025 total budget expense comparison. So we've got, again, these expense classifications: personal services, other than personal services, capital, non-government, and operating transfers out. And as you'll see, if you take a look at the comparisons here, pretty much everything's a reduction in all of these expense classifications. So getting back to revenue really quick, municipal income tax is the primary source of funding for our municipal government. The vast majority of the work that we do is allowed for by the people who work either in the city and provide income taxes to the city through their jobs here, or through our residents who work either in the city or elsewhere and provide income taxes to fund the government operations. Now, there are two additional funding sources that have received a great deal of attention during this year's budget process, and those are the property tax and the interest income. And I would like to take a moment to address both of those briefly, and I'm sure there will be more questions once I do. So, property taxes. Everybody knows that our valuation for the properties in the city of Cleveland Heights have gone up generally to the tune of about 40 to 44% in the city of Cleveland Heights. Now, I have explained to people, and the county has explained to people, that the valuation increase that you experience in your property doesn't directly correspond to a tax increase that you will have to pay for your property. Well, why is that? That's because the state, in its infinite wisdom, passed House Bill 920 and provides for sort of a disconnect between the increase in valuation for a property and a one-to-one increase in the taxation on that property. So that means that primarily the school district and library districts are bound by the amount of money that they requested from the people in their districts. And so even if your valuation goes up, that doesn't mean that the school district gets a corresponding amount of more funding. So your taxes don't go up the same amount. However, city governments and the funding that we receive from property taxes are not subject to the exact same restriction. And so when we see property value increase in the way that we have in Cleveland Heights, we will also see a more corresponding increase in the taxation on that property that goes to the city government, because we're not subject to the same restrictions as the library districts and the school districts. So what you'll see, and this is something that I think has shocked a lot of people, that 41% difference between our anticipated budgeted revenues for 2025 and the 2024 revenues that we budgeted for property taxes, going from $10.4 million to 14.6. That seems like a very large increase. I'd like to explain a couple reasons for that increase. One, clearly, is the valuation increase that we're experiencing in the city of Cleveland Heights. Now, you might find that property owners will go to the Board of Revision and file a complaint to reduce their property valuation, and they might be successful. And so we might not experience that total 44% increase in valuation at the end of the day. However, this property taxes classification consists of a bit more than just sort of our residential property tax. One thing that I think we should recognize is that we budgeted for $10.4 million, but that doesn't mean that in 2024 we have received $10.4 million. And so just as a heads up, and this was going to be a conversation that we had with council before, we didn't get a chance to just yet, but now we can. What we actually have received thus far this year in the property tax line, the property tax classification, is over $12 million. So we budgeted for 10, received over 12, and now with an additional increase in valuation, we're anticipating an even larger figure in 2025. But that's not all. There's another particular circumstance that is specific to Cleveland Heights and our level of development here. All of you remember the Top of the Hill. This is a long-standing, long-awaited development project that is now up and running. And one of the things that occurs when a project like that gets up and going is that the TIF revenues start flowing in. And so one of the things that is included in this property tax classification is TIF revenue from the Top of the Hill project, which this year was approximately $1.8 million. So 1.8 million of this anticipated 2025 budgeted revenue is also Top of the Hill TIF proceeds that will be taken in as revenue and distributed in the way that the TIF requires. Some of that will come to the city, some of it will go to the school district, some of it will go to the developer for their development. So property taxes, it's a bit more complex than, valuation goes up, but the taxation doesn't go up a corresponding amount. While that's true, in this circumstance, it is reasonable to anticipate that we would go from over $12 million to over $14 million in property tax revenue, given the massive increase in property valuation that will directly impact the city's property tax, revenue next year. Okay. Now, at some point, if people have questions, we're going to get to them because I know that this is something that a lot of people don't get. I promise you, it is very, very common to not understand property taxes because it is a relatively complicated thing that we don't deal with every day. So let's get back to the other controversial, relatively controversial revenue classification, and that is our interest earnings. So in 2024, well, for fiscal year 2024, we budgeted around $2.25 million in anticipated interest earnings. And, that's a lot of money, it's millions of dollars. One of the reasons why we were, optimistic about our interest earnings was interest rates and the amount of cash that we had to place in our interest-bearing accounts. And I'll tell you, looking at an expected $3 million up from $2.25 million can be a bit jarring as well. So we've budgeted for $3 million in investment interest earnings for next year. And I know that there are people who are wondering, well, they're anticipating that interest rates may drop next year, and we will also be spending down some of that ARPA money. So how is it possible that we are anticipating more budgeted interest income than we budgeted for this year? Well, similar to the property tax, the budgeted amount is a bit misleading. And so I will let you know that our actual receipt of interest income this year, in year 2024, up from 2.25, we got over $4 million in interest income this year. So technically, if we're taking a look at whether or not we're going up or down in our budget next year for expected interest revenue, we're actually going down by about a little over $1 million. Actually, I think so $4.6 million is what we've earned thus far in 2024. And so we're going down about $1.5 million from our actual revenues in interest earnings from 2024. And so in that way, looking at this particular circumstance and the complexity of budgeted versus actual, it's not a completely unreasonable expectation that we would achieve a $3 million interest earning based on our $4.6 million interest earning in 2024. So, but I want to take the moment to address both of the concerns, which I think are not unreasonable to have. And that is the idea that interest rates are potentially decreasing. And so, in that particular environment, maybe we should expect to see less investment earning. And also this question of spending down some of these larger balances as we move through this ARPA funding. So 2 issues with those 2 issues. The first is that even as interest rates come down, going from 4.6 to $3 million is a reasonable expectation. We have been very lucky working with Star Ohio. Their interest rates have been relatively high. We're looking at 4.5, 4.8, somewhere in there. And even if interest rates do come down, and I don't know that we can be completely sure because we don't know what the environment for inflation will be next year. There are some policies at the federal level that are being discussed that may have an impact on inflationary pressures that make inflation go up. Tariffs and those sorts of things may make inflation go up, and a response to that would be to raise interest rates. But then additionally, and I think this is an important thing to remember, we have a lot of ARPA money, but we have a lot of money in reserve as well. And we have money in those interest-bearing accounts. And with the ARPA dollars, the deadline for spending, for actually expending those ARPA dollars, is 2026, end of year 2026. We don't anticipate that on January 1, 2025, all of that money will be out of our accounts. Much of this money will be given on a reimbursement basis. There will be requirements for receiving that money. And our anticipation, and based on the advice from our investment advisors, we anticipate that going from $4.6 million in interest earnings down to $3 million in interest earnings is a reasonable expectation, a relatively conservative expectation for 2025. All right, so I think let's get back to our expense classifications. I wanted to address one of the concerns that actually I think it was a couple council members brought up in the conversation about the previous appropriation ordinance that was introduced. There was a concern that in the budget presentations for each department, there was a spreadsheet that showed personal services figures for each of the departments this year. And 1 or 2 of the council members went through each of those budgetary presentations, those department-specific presentations, and added up the dollar figures for personal services in each department and for other than personal services in each department, and came up with a number that did not match the total budget for personal services or other than personal services. Now, in an email, I've explained this to council, but I did want to have that explanation publicly as well so that people watching, people in the public can hear this as well. The department presentations are intended to give a window into the specific activity of those departments, the personnel needed to provide specific services, the supplies that might be needed or contracts that might be needed for the other than personal services that would specifically relate to a particular department's activities. However, there are some other funds, because we work on a fund budgeting system, there are some other funds that are organization-wide. One of those funds has a great deal of personal services funding in it. Over $8 million of personal services funding is in Fund 701. Now, Fund 701 is not specific to a department. Fund 701 is intended to fund hospitalization for the entire organization. So it can be used to provide hospitalization funding for any department within the organization. So it's not specific to a department. We don't know all the time, where hospitalization funds, for instance, may need to be directed. And so having a centralized, and we call it general operations. We call it general operations because it is general to the organization and not specific to a department. And so $8 million of the discrepancy that was highlighted by a couple of our council members between this departmental budget presentation figure and our total all funds personal services figure is explained by those funds that achieve personal services goals for the entire organization, not specific to a department. And it's the same with other than personal services. We can get into more specifics on that in a bit, but just know that this was explained to the council members in an email to sort of alleviate the concern that there is this massive discrepancy in personal services funding between what the budget says and what the presentation said. All right, so capital. Take a look at this table. In 2024, we budgeted for $51 million in capital spending. This year, in the budget that is being presented right now, we've got a little less than $4.5 million in capital spending. Now, this is found throughout the budget in a variety of different places, including road projects, I believe, maybe a couple million in road projects is found in that capital figure. And you see this massive change. It's a 91% decrease in capital spending. And as I said earlier, our expectation of capital spending this year was anomalous in a couple different ways. One, because of ARPA. The ARPA spending on capital is included in that $51 million figure for our 2024 budget. Additionally, we spent a relatively high amount, or we budgeted a relatively high amount of money on capital this year because we had such a large reserve that it was a good idea to use some of that cash to pay for some of our capital needs instead of taking on debt in order to pay for capital needs. Now, before we get off of capital, I want to explain something. And this is something that I think needs to be said, and we can have a difference of opinion on whether or not this is the right course. And maybe over the course of the conversation about this budget ordinance, one of the amendments will be to include Fund 402 in our operating budget discussion as well. Now, initially, I deliberately excluded Fund 402, which is our Finance Capital Fund. Fund 402 is intended specifically to work on capital projects, to do capital improvements and make capital expenditures and purchase capital equipment. Fund 402, often we call it the Financed Capital Fund because what we do, or at least what municipalities do quite often, is borrow money that then is used to pay for these capital expenditures. Now, we haven't done that in a while, not really, but we've spent cash for the last several years on capital improvements. And in this case, we've got somewhere between probably around $5 million and $10 million that we're anticipating in unencumbered Fund 402 dollars at the end of this year. So there is sort of a bank of unencumbered funds in Fund 402 that has not been budgeted yet. Now, my intention was to have a larger conversation about our capital expenditures with the council, with our directors and our departments, in order to collaboratively prioritize some of these capital expenses. And I recognize that we didn't have the opportunity for that. And so perhaps my directors and I will get together again. And as we're working through this operating budget and perhaps with council's approval, amendments can be made to add Fund 402 funding for certain capital expenses for 2025.
Mr.
One
Mayor.
example.
No, I want to appreciate that because I know that this is, and Law Director, please let me know if this is out of hand. But those capital expenditures, I know were a huge topic in terms of our discussions and that approach. I know when your staff initially did those presentations with us, it was very clear that we were segmenting out that portion so that we could have a broader part or a broader conversation about those expenses. And so as we're talking about this now, I just want to make sure that the public knows why that's important for me in this instance. It's because it's a roadmap, not just on what the city needs now, but what we need to invest in 3, 4, 5 years from now. And so being able to shift that outside of that budget conversation and have a broader conversation with all of council collaboratively, for me, I think was critical because it allowed us not only just to talk about what's happening in 2025, but get a sense about what the city needs to do in terms of its future. I think it's important that everyone knows, and I think it's obvious that everyone knows that there have been some infrastructure issues in our city, some things that we've lacked investment in for some years. I joke, but at the same time, I'm telling the truth. When I started working for the city, my second time around in public properties, I was 19, and I was shocked to see that the truck I was riding in was still on the road just a couple of years ago, and I'm 42. And so we've had these issues and these conversations. So I'm looking forward to continue to have that. And the reason that it's separated from me and that I think it's important to say is because it allows us, again, to really have that broader conversation about those emergent needs that might come up, but also in terms of strategy, where do we want to go in terms of how we invest in the city to make sure some of these things and these gaps are filled. And so having that conversation with council for me during that budget conversation was really, really important. And I just want to make sure that the residents understand why that was separated out. I know that the acting finance director shared that information on during each topic, but for me, it was really, really important for us to hear not just those current needs, but how we're going to address the needs for the future. And being able to do that collaboratively with council would have been the first time that we've been able to do that, would have been this year. And so if anyone's curious why that was removed, it's because that conversation is really so critical. I think to have that separate, I think was just a great thing to do in terms of making sure that we're investing the proper time and conversations into that. And so I'm hoping that in the future we can have that conversation and really talk about what that looks like as a council going forward, and if we want to continue to have that.
Well, I'll tell you, from my perspective, even if in this particular process, we don't have sort of the more full collaborative effort that I was envisioning, I think that it is still important. And council members have brought this up as well and have asked questions about our capital planning, long-term capital planning. And that definitely needs to be a collaborative effort between me, the administration as a whole, and the council as we work toward getting back to forecasting our capital needs, planning our capital needs. What we've been doing for the past couple of years is playing catch up. There are a lot of deferred maintenance needs in the city. You can see from the Crown Victorias that are still on the road right now that we've got a lot of work to do to catch up. We have disinvested in part by necessity because of budgetary pressures over the last decade, but I think that we stretched it a bit too far, and that's why we're playing catch up right now. Now, when you're playing catch up, you need to get back to zero, and so that's what we've been trying to do is more investment in our facilities, in our equipment, in order to get back to a semblance of real operational optimism and optimal work. So there's one more thing related to capital that I want to stress, though. beyond the capital planning process that I know that we, as a government generally need to work toward, so that we can think 5, 10, 20 years down the road and make plans for investing in our ability to replace vehicles as they need to be replaced. That's one huge piece of it. It doesn't necessarily belong in the strict, appropriations for a fiscal year conversation, but it's a conversation that needs to be had. But there's another a piece of the capital question that I need to take a moment to thank the council for, and that is their cooperation and acceptance of the deal that we struck with Leopardo Energy this year. This was a really, really difficult undertaking. It took quite a while, longer than I anticipated that it would, but ultimately we got to the finish line with a company called Leopardo Energy. Earlier this year, we put out an RFP. We received some responses. We interviewed the respondents, and we selected the best partner for what is called a commercial PACE energy savings performance program. Now, what this program is going to do for the city of Cleveland Heights next year is monetize anticipated and investment grade audited savings from certain energy efficiency improvements and other procurement efficiency improvements that Leopardo Energy will help us to pursue. Those savings will go toward debt service payments on capital improvements in our city. One really good example of this is our service garage. Our service garage has been in terrible shape. The roof is in, you wouldn't want to stand under it. You certainly wouldn't want to put solar panels on it. If you tried that, it probably would collapse on you. We've had issues with the structure of the building to the point where we had to rope off sections of the service garage to ensure that employees were not injured by falling debris. Now, this is something that we could spend a lot of cash to fix, or through this partnership with Leopardo Energy, we can use these savings to finance the improvements to our facilities. We'll see the same here in City Hall, probably at the community center and other facilities as well. Also notably, we're going to be looking toward an improvement program for our street lighting, which will help us to both improve the lighting and increase the lighting in business districts, while also hopefully strategically lowering the color temperature in our residential neighborhoods of the LED lights that we hope to install to make it a little bit less jarring at night when people are trying to go to sleep while still achieving the same energy efficiency goals. So we're looking at over $18 million, possibly more, in savings and capital projects, in addition to the $4.4 million in capital expenditure that we've anticipated in this iteration of the 2025 appropriations ordinance. So looking at approximately $22 million in capital improvement, and there's room for more in Fund 402. And I'm looking forward to that conversation with council and with the directors here.
Mr. Mayor, just for clarification, again, for the capital, when we had the conversations with staff and we did the presentations, I know it was addressed that there were some larger capital improvement projects that they wanted to share and have a broader conversation with, and then there were some needs that they said right now there's some things that there's some leaks we need to kind of plug, and we're having that broader conversation. Was the idea in the initial conversations with council was to possibly see with these additional funds that are there, if any of those needs that we're talking about that may have been 3 or 4 years out, if we could have then placed those in that budget. I just wanted to because that seems like the road we were going in, the conversation we were having with the directors and the staff is that they weren't merging those together, but they did want to at least us to know what was on their list so we had clarification from their point of view what we were looking at. And so I do think it is still important to have that conversation, both pieces at the same time, to see if there's any opportunities to pull some of those things maybe to the forefront while we're handling some of those. So I really would like to find a way to continue that conversation because I think, again, the direction that you're trying to go with this is critical in terms of what we're looking 3, 4, 10 years out in terms of having this plan and being able to have that conversation. And so I think as a council, for me, one of the things that I want to do when we come back is have that conversation about what that looks like and to make sure that we can get that nailed down because that's different than saying that everything was kind of lumped together. I just want the public to know that separation was made very clear. And I want to continue that conversation that there were some things that were included in their presentations in a budget that our departments really wanted right now that they're saying that are needs. And then there were other things that they want to have a further discussion about. And so I just want to make sure that there's clarity on that. And so I'm looking forward to continue to have that conversation with council, but that's where we ended up with that conversation. But again, that's going beyond pretty much where any of us would even be here, it's possibly. And so that's why I think that conversation is important because it prepares any future council, any future mayor with that roadmap to be able to say, this is what's needed. This is how we plan for this is how we structured for it. And I think that's going to be important for any future budget. So thank you.
Of course, and you know, you bring up a good point. I think the conversation that we had during the departmental budget hearings included a lot of capital requests. Now, to the point where I wouldn't pursue all of those in a single year, and I don't believe that we could actually digest that level of capital investment as an organization in 1 year, even if we had the resources to pay for them, just because of the administrative effort that it would take to manage all of that. There are certain things that I think are more immediate needs that we can probably prioritize. I think that having more of a conversation will be important, but some of the smaller, more urgent collections of requests, I think can be funded through Fund 402, particularly since we are anticipating a relatively large ending unencumbered balance in Fund 402 at the end of this year, and we haven't even scratched the surface of what we would fund with those millions of dollars that we have in that fund.
Mr. Mayor, that goes back to another point in terms of making sure that when we're having these conversations, I know that the council's approved this 3-month budget, but that goes back to how difficult this conversation is when we're looking at it that way, because there's time restraints and investments that would have to be made now and planning from that point. And so as we're looking at this budget and talking about making these adjustments, I think it's important for the public to know that our departments need that level of clarity because they need to know not just what we're going to invest in, but the how. That timeline is critical to contracts, to conversations, and to any work that we need to have. And so having just that 3 months there makes it extremely difficult to plan, to strategize, to forecast any kind of adjustments or changes that need to be made. And so that again is one of those things that I know we need to have a conversation in our next council meeting about is how are we going to address that and those needs, because that's not something that we can put off while we do this. We really need to start thinking about that now in terms of forecasting some of those investments. And so for me, that's one of the reasons that I want to see that full budget is because this allows us to really see that clear picture and really start from the beginning planning the right way for some of these projects. Again, it's impossible to really plan for a capital improvement project within that 3-month time frame. So we've got to have a greater level of clarity for that for the staff.
Well, at this point, and I would like to mention, at this point, although I don't believe that it was the best choice to abandon a full year budget and move toward a temporary budget instead of sort of working through some of the amendments, having some of this discussion about the rationale for our revenue estimates. and those sorts of conversations, and then, pushing forward and really digging in and figuring out how to get to a compromise on a 12-month full fiscal year budget, even one that maybe pulls back some of the funding until people feel a bit more secure about where we are financially. But in Fund 402, for instance, right now, as of today, in this moment, right now, our anticipated ending balance in Fund 402, our finance capital projects, looks to be $9,490,943.02, which provides a great deal of headroom for many of the capital projects, especially the more urgent ones that we would want to pursue in 2025, after having a conversation and prioritizing those projects that we can pursue in 2025. So, for instance, I know that council was very cooperative in, offering and following through on purchasing 5 of the new hybrid police cruisers, the Interceptors, and with the potential expectation that 5 more would be purchased in year 2025. And in this context, Fund 402, Finance Capital Projects, would be a perfect place to source the funding for those purchases, in addition to a new defibrillator if we need to do that, or new computer equipment for fire prevention. Those sorts of things can be funded out of Fund 402 with no impact on the general fund and the general fund's expected unencumbered balance at the end of 2025. And that's important because, adding additional capital expenditure in 2025 does not have to have a negative impact on our general fund balance, because we can fund those capital improvements and expenditures out of Fund 402, which is relatively healthy. So I'm going to take a moment and I'm going to show you a little bit of inside baseball. Let's see. So in the administration, we use a system called New World to do a bunch of things. One of the things that we do in New World is set up our budgets and run reports about our budgets and our finances. I can be frank with you, it is not the most user-friendly system, at least in the way that we have it set up, and as it has been set up for years. But it is the system that we have, and I can use it right now to show you a bit of information that is generally too cumbersome and too detailed for the higher level budgetary conversations that we normally anticipate a council will engage in, certainly over the history of this city. However, this council has shown itself to be very curious about very detailed and specific items in this budget, from individual employee salaries all the way to whether or not the position documents in the budget presentations that each department gave matched exactly the total fund, personnel services funds. And so this is something that I think people will maybe benefit from taking a look at. So I'm in the cross-fund report section right now, and we can take a look at a summary reported by fund and then account. What I'm going to do, I'm going to move all of our funds over. Each fund is sort of a separate pot of money. So you see the general fund is here. We've got a budget stabilization fund, which has about $1.4 million in it. And the almost exclusive purpose of that fund is to account for the periodic 27th pay period that we have every so many years. We've got a street construction and maintenance fund. And so we're pulling all of those funds over, and then we're going to go to the accounts within those funds. There are a bunch of different categories of accounts. One of them, and this is the one that we're going to look at, is assets. When you click that, it reduces the number of available accounts that you can run into the report. So I'm going to pull all of those over. Not all of them will actually have an impact, but it's better than trying to pick and choose. So I'm going to hit print. And what we'll see when this prints, hopefully soon, because that would be embarrassing. Let's see. Say again.
Printing to the screen.
Yeah. It doesn't print to paper. It's intended to pull up. There we go. I haven't used this computer for this purpose before. Let me give it another try. It's in the toolbar. Is it here? Because I can't actually see.
Yeah, that one.
This one? All right.
Always allow.
All right. Is that where I'm? Okay. All right. Let me give it another try. All right. Let's see what happens. So what you'll see loading is the cross-fund report. Oh, you know what? Actually, let me start over because I'd like for you to see the cross-fund report from January 1 all the way to now. So we're going to do year to date. That's from January 1st of this year through today. And we'll do another print. All right, cross-fund report. This is where we find our unencumbered balance in each of the funds that we use to run our government. You'll see at the top, the general fund, which is our primary fund. It is an unrestricted fund that we can achieve any of the goals of the government and pay for pretty much any proper public purpose of the government. And our general fund right now is relatively well updated with the exception of some of the transfers that we still need to make from the general fund and some other unrestricted funds into some of those funds that may be running a deficit right now budgetarily, because we have to end the year with all of these funds avoiding the negative. So right now, before we get to transfers, we've got our beginning balance. And that was the beginning balance January 1st, 2024, a little over $21 million. Over the course of the year thus far, you see what they call total debits and total credits. Now what that means, total debits is revenue that we've taken into the general fund, income that we've brought into the general fund, and total credits are the expenditures that we have made from the general fund thus far. As you can see, total debits, or our income, exceeds our total credits, or our outflow. And so what that means is that right now, according to everything that we have in our system as of yet, and this is before transfers, so this will change, but right now, we're looking at, I believe that says $34 million in unencumbered general fund money. Now, we've still got some transfers to make. I did a rough calculation of what those might be, and it's looking like maybe around $5 million. I could be wrong about that in terms of all of the accounts that have negative balances, but I think that we are pretty safe when it comes to ending this year with a really healthy unencumbered balance and beginning next year with a really healthy unencumbered balance in the general fund. I'm sorry, did you have a question?
I just want to make sure, could you give that number one more time? I just want to make sure that I had a couple of people that just asked. We have a lot of folks watching online too, and they were asking for that unencumbered number.
All right.
Thank
you. So for the general fund in particular, we're looking at around $34.8 million as of current state. This is before transfers, because we will be engaging in, and this again, thank you, council, for approving our ability to move money from those unrestricted funds into those funds that require it in order to maintain a positive balance. But I don't anticipate, and we'll see over the next day, because we'll be providing a report to council about those transfers tomorrow. We'll see in the next day what those transfers look like, and provide more information to council and to the public once we've completed that process. But right now, it's looking pretty good with a current unencumbered balance of $34.8 million in the general fund. And if you take a look, I'll go to the next page so that you can see our total, which looks like around 100. Well, you know what? Actually, I think maybe we've got the payroll agency fund, and I think we've still got Fund 241 in this. So let me make sure that we're not overestimating. I wouldn't want to overestimate. So we're looking at around $26 million that is still in Fund 241. That's our ARPA fund. So if we're looking at this all funds unencumbered ending balance as it currently stands, we want to subtract $26 million because we're not going to consider the ARPA funds in this total. And we'd like to subtract, I believe, the payroll agency fund, which is Fund 888, and that is approximately $44 million. So what is that? We're looking at around $70 million that we would want to remove from this all funds ending balance. So we're looking at around, let's see, $30 million in the general fund, and what is that, around $80 million unencumbered balance, all funds. It's a relatively healthy place to be for a city like ours. And so I know that there are a wide variety of other questions that both residents and council members had about all of this, both the revenue side and the expenditure side. Right now, I'm going to try to keep this specific to the numbers on this page, the numbers in the appropriation ordinance, and go from there. Instead of thinking about some of the other issues, we can have longer conversations about some of the other issues that are also informing council's perspective on an appropriations ordinance generally. I would like to address those things, but I'd like to make sure that we are operating from the same level of understanding, the same set of facts about the specific numbers that we have in front of us, both for our current unencumbered balances and our expected expenditures and revenues for next year.
Mr. Mayor, that's one of the things that I want to suggest with council, because I know there were a lot of questions, but many of those questions weren't directed or connected directly to next year's budget. So being able to segment those out, obviously to make sure that they get those those answers that they need, but that we're answering those questions that are going to push us where we need to go, I think is helpful for the community also to see those segmented out and get an understanding that there's some high level questions and some future focused questions that the council does have about the budget. Very legitimate questions about how we're moving forward and how we're investing in things. But then there are some things that we absolutely have to have in terms of passing this year's budget and being comfortable with that. And I think segmenting those two out is extremely helpful. I know that's not a conversation that you can have in a silo. And so that's one of the things that I'm hoping we come back to council is to really make that distinction and separate those two conversations out so that we have clarity about what's actually needed in terms of my colleagues feeling comfortable enough to pass that budget versus spending a lot of time on questions that, although they're important, they're not directly connected to getting that budget passed. And so I appreciate us having that conversation. And that's something that I want to go back to my colleagues again in January. I think that'll help move this conversation forward is to bring clarity about what is needed and what's important and necessary for the budget versus what's just a clear understanding about where the city is going forward. Since I think we've all come to a consensus that there's no emergency and the sky isn't falling. And so I think there's more than enough time to be able to have that conversation long term and get clarification on those things. So thank you.
Yeah, of course, and I think one of the things that I am very interested in is moving us to a better place budgetarily and operationally. My priority tends to be the practical. I don't want any of my directors' jobs to be harder than they have to be. I don't want them to be more complex than they have to be. And I recognize that, council is the budgetary authority and has the authority to pass a temporary budget restricted to those 3 months. Somebody asked me today why I was bothering to call this meeting so quickly. Now, it's December 30th. I don't know that that's quick, but from my perspective, I'm not on vacation, I guess, and so from my perspective, I think it's important that even though statutorily there is the allowance for a taxing district or a jurisdiction like ours to wait until March 31st to pass a budget for the rest of the year. I think that it is at least my responsibility to push to make sure that we are doing this as expeditiously as possible without foregoing the conversation, the substantive conversation that will push these issues forward and help us find a compromise position. But I think we've all sort of agreed that generally a full fiscal year budget is better in concept than a temporary budget. A temporary budget provides a great deal of additional complexity for directors who then have to sort of on the fly, in certain respects, redetermine what some priorities are in a way that maybe strains capacity. Additionally, it certainly makes it slightly more complex if a particular appropriation is not enough. We may want to come back to council, 3 times a week to get council to vote on budget increases, but I imagine that could get a bit taxing on council's time. Having a full year budget and allowing that budgetary authority to be provided to the directors who are doing this work with their teams provides less complexity in their jobs and fewer failure points for all of us. I'd like for our jobs to be as easy as possible so that we can get good work done without overburdening any of our jobs. So that's sort of my general argument. I know that I think some of the council members and I have traded accusations of fear-mongering or those sorts of things. I, for one, don't believe that there is any inherent risk in passing a 12-month budget, especially considering council can turn around and change it the very next day if they choose to. Council doesn't believe, or at least I've heard expressions that indicate to me that council does not agree with my assessment that a 3-month budget provides a measure of uncertainty for people that may be a straw that breaks a camel's back. I don't believe that this council would allow us to enter April without an appropriation. So I want to state that. I don't believe that this council would do that intentionally. I know that all sorts of things can come up and I wouldn't want to presume or tell the future. But having a 3-month budget as opposed to a 12-month budget does create some uncertainty that I think has already been felt. I've heard from some people, some of you may know that I've been working and intending with the assistance of both the planning director and our new chief building official to build out a building inspection and permitting team for the city so that we can move away from reliance on Safe Build. We prefer to have these types of services be provided in-house. And we've already gotten a candidate that Chief Building Official Elmy told me today decided that they wanted to stay where they were. Obviously there can be multiple motivations for that kind of decision, and I wouldn't want to presume, but in Mr. Elmy's telling, it seemed that was a contributing factor. And so I do want to express that that's not the end of the world. It's not the end of our government. I'm not, Chicken Little over here, but I would like to say that if we can do something that's more optimal, I'm interested in pursuing it, and that's why I called this meeting, and I'm very, very appreciative of the council members who joined us today. And I'm looking forward to having more conversation about that in the future. So, one last topic, and then I think I'm going to be done pontificating. And that topic is, where did I cut? How did I make these cuts to go from a budget deficit, structural deficit, to a budget surplus? Well, I took a very, very deep dive, line by line, into the creation of this budget. Maybe I'll see if I can pull up something for all of you to take a look at. Let's see. So, when we're creating a budget, annual budget processing, let's see. Actually, you know what? I'm going to go back to a report and take a look at the budget worksheet instead. All right. So here in the budget worksheet report, we can select the 2025 budget. We could look at all, both expense and revenue, but I'm going to focus on the expense side. Let's see. Summarize to, let's see, the fund level. I don't want it to be too cumbersome. All right. Transactions, L2. All right. All right, bear with me. Running reports is always tedious. So, I'm going to focus on the general fund because that is the primary place that I made cuts. There is one other fund, I believe, that I made some cuts in, and we can speak to that a bit later, but that was about $100,000 that moves the needle a little bit, but not a lot. So I'm going to focus on the general fund. So I've selected general fund here, which restricts all of these organizations to general fund organizations. I'm going to pull those all over. Take a look at all of these. Actually, you know what? I think I'm going to stick with our personal services because that's where the most of the changes were made. Actually, no, I'm not going to bother because I can barely see this over here. All right, balances to include. So this is the section where we can take a look both at the proposed 2025 budget and we can make some comparisons. So take a look at 2025 proposed budget and let's compare it to our current 2024 budget. And we can maybe add a calculated column. What we're going to do here is take a look at the difference between the two. Column A, We'll do our 2025, column B. We'll take a look at our 2024 amended budget. Let's see. Is that it right there? All right. We'll apply and we'll print. Let's see what happens. Hopefully it loads. All right. So this is what it looks like when this report opens up. Not fun. Let's see. I can expand that a bit. That's much better. Okay. So we've got our 2025 budget proposal. We've got our 2024 amended budget that we are currently finishing up this year. And, okay. So if you look at salaries, between the two, salaries are going up a bit, about $2.5 million in the general fund. Overtime is going up a bit, about $85,000 in the general fund. When you scroll down a bit, though, there are some other items that I'm going to point out to you in the fringe benefits section. This hospitalization section right here, it's account number 1023, and you see it, 1023, in multiple funds. Multiple funds, have a hospitalization account. And here you see that we have budgeted $7.5 million in 2024 for hospitalization in the general fund. And I have reduced that figure from a figure that was larger than 7.5 to $7.139 million in hospitalization in the general fund. You might ask, why did I do that? Why did I reduce it? Why did I reduce it from the original figure that was in the proposed budget that I provided to council initially? Well, this is, and I gotta say, this is one of those circumstances, Council President, you and I have talked about this specific to the TWG process and how the way that went resulted potentially in a better project than it might otherwise have been. And sort of viewing this, as contentious as it's been, and as difficult as it's been, sort of viewing this process as an opportunity. And that's why I took such a deep and close look into this budget, because I wanted to make sure that what I was providing to council, A, addressed your concerns, but also B, was the best budget that I could reasonably provide. And so when I took a look at hospitalization, I looked at our historic hospitalization actual spend. And what you find in hospitalization is that we have chronically over-budgeted hospitalization relative to our actual spend. And this isn't the only place that you find hospitalization. You also find it in Fund 701, which is separate from the general fund. So in this case, this was it was still an increase from our current spend and our historic spend, but it's a reduction in the budget in unnecessary hospitalization funding that only served to pad a budget for no good reason. And so, taking a look at this and figuring out and right-sizing some of these ancillary and I would say historically inflated figures budgetarily has allowed me to provide both the comfort of an increase from our current spend if we're thinking that there might be an increase in hospitalization costs, but not to the excessive degree that we've historically seen. And I don't know if you'll remember, last year, we had increases in hospitalization that we budgeted for. This number that we've budgeted in 2024, that $7.5 million, is an increased number because there was the question about whether or not there would be an increase in hospitalization costs. And what we found is that the actual spend doesn't bear out the inflated budgeting that we've done in hospitalization. And that's why I right-sized it. It's still an increase from our current spend. It still anticipates the potential for increased hospitalization cost, but it right-sizes it in a way that throughout the entire general fund allows us to achieve a surplus instead of a deficit. Now, we can have a lot more conversation. I don't expect that this is the forum for that. So I'll be sending you guys a report to take a look at line by line, look at every single fringe benefit in every single fund, every single, personal services. By the way, just for clarification's sake, our budgeting software separates expenditure 01, personal services, from expenditure 02, fringe benefits, but the categorization is singular. So both of those comprise personal services in our budget. So these personal services, salaries, overtime, crossing guard, sick leave pay, so on and so forth, and our fringe benefits combine to form our personal services, just as an aside. So, and that is sort of the last piece of this overview of this newly revised budget. I'm looking forward to having more conversation with the council and with the public about this. I don't know, I would like to provide any opportunity for staff who is hearing this particular presentation for the first time about these revisions. If there are any questions that either the two members of the public have or the members of the public who are also staff here at the city might have. And I don't know if council members have more questions, but I would like to provide an opportunity for those questions as well. I don't know that I'll be able to answer all of them on the fly, but I'm willing to try. Yeah, no, happy to pause. So, oh yeah.
Yes, Mayor. When do you expect that we'll get the updated financials?
So I think Director Feltz can probably expand on this question, but my expectation is that once we get through the process of finalizing the transfers that we need to make before the end of the year and provide you with a report of those transfers, we can also provide you with sort of our current financial state, our current unencumbered balances at the end and beginning of the year. And beyond that, Mr. Feltz can provide any more input into that.
I can give you the status. What status? Can you hear me?
Yes, I can.
If you want to use the mic.
I have been posting October, November, and December. And when I was meeting with the President Council out in the hallway for the last meeting, we determined that I didn't have the, I couldn't find it actually. Addie sent me the financials for September that you were accustomed to receiving. So I've been building the reports, posting a lot of transactions for the 3 months. I do have to sit down with Donna to make sure, she's our accountant. I do have to sit down with her and make sure all the entries are posted and everything that, all the journal entries that's supposed to be done monthly are done, including the ones that the, including the ones that were done by the previous finance director, Tara. So that's where we are now. We've gotten a lot of things posted today for December. December didn't have any revenue or expenses in it. as of last week, but today we posted quite a bit of information. And so we should be able to get financials early, let's say probably early week after New Year's, in terms of, getting those 3 months that you haven't received.
I just want to make it clear that we, the last financials we got ended September 30th.
Correct.
We did not vote last year on a budget until we got October and November's financials, and we did not have those and do not have those as of today. And I can't wait to see them the first week of January. I mean, if it's the next week after, I'm not going to make a fuss, but that's certainly something we do want to see. So appreciate that.
We're moving in a good direction.
Glad to hear it.
One of the delays we've had, though, seriously, is year end, and we've been trying to make sure all our ARPA dollars are spent, and we spent a lot of time trying to get all the I's dotted and T's crossed. Any other questions? Thank you.
All right, well, I don't know. I think this is a good start. Again, like I said, I am really interested in getting to the resolution that is optimal for the city. And I think that working together and diligently working through these things, we can get there. And I think we can get there sooner than we think. So I'm looking forward to it.
Thank you for this, Mr. Mayor, and I'm looking forward to this. I know that I've got several things on my list that I want to discuss with council to try to move this forward when we come back for our first initial meeting this year. Just so the public knows, there's several things I've written down, and I think will help move this process from the capital improvements to some of the requests to how we're organizing the information that council's requesting. And I think will help us partner with you much better than this. I'm hoping that we can come to some kind of consensus as we continue to gather this information. But thank you for this tonight.
Absolutely. All right. Thanks, everybody, for coming. Have a wonderful new year.